Hey everybody, this is Uncle P from Super Easy Forex. So here's the deal. On this trading week, there's a couple of concerns. Well, there's a lot of concerns actually this week. So I'm going to go through some news events and stuff like that. Also, team, here's what I'm going to do. Okay, this is my trading plan for the week. Number one, I plan on not doing a whole lot of trading this week because there's a lot of news events coming out, and the market may be quite jumpy again, unfortunately. But it is what it is. You have 52 weeks in a year. You have 52 trading weeks in a year. And therefore, you're going to have a couple of these weeks that's pretty slow sometimes. Again, if you have 52 minus, let's say, 4 weeks, then that still leaves you with what, 48 weeks of still doing okay, right? Even if you have a bad trading week or two or 3 or 4 out of the year, okay, so that still leave you with 48 good weeks of trading, okay? So never interpret your success by 1 week, 2 weeks, 1 day, 2 days. It is what it is. This is for the long haul. So here's what my plan is for this trading week, okay? And then I'm going to get into some news events so you guys are aware of that. So my trading plan is I'm going to set my trend setting. Now, again, do what you want. This is just me doing my thing. You do what you want. But for me, I'm going to set my trend setting on 20 just to add additional filtering to my trades. And I'm looking to trade on the 15-minute and the 30-minute for this week. That's what my plan is, okay? All right, so here's the reason why. Let's go through some news events so you guys are aware of what is coming out this week and why I'm going to be trading with additional caution. All right, here's it is. Let's go. And there's others also on here. Just check your MyFX Book app. Again, I'm not the end all be all in your due diligence. I'm just giving you heads up, okay? So here's what I'm looking at. Number one, on Tuesday, they have the JPY has its interest rates coming out on the JPY, the yen. Then you also on Wednesday, you have CAD coming out with interest rates. Then you have the AUD, which is coming out with some news, a lot of different news. And I'm sorry I didn't have all of these written down in detail, but check your book. Check your MyFX Book or whatever mobile app you're using or whatever program you're using to check for news events. So they have a lot of news coming out on Wednesday on the AUD. Okay, and then on Thursday, you have the euro coming out with interest rate news. So you see how many people are coming out, how many countries are coming out with interest rate news. So it's kind of, I got to be cautious. All right. Then you also have on Thursday, which is going to be pretty important news, and that's the retail sales numbers for the U.S., right? How well is the economy recovering and getting back on its feet? That is a big challenge, and I'm going to tell you why. Because at first, things were looking pretty good. The market was coming back to life and everything was going well because the country was reopening, such as what the president wanted. The problem is that the coronavirus cases, according to reports, are spiking tremendously in certain parts of the country. Therefore, the very cities or states that were reopening to try to get business back in order are now finding themselves having to reverse that action and close right back down again. Why is that important? I'll tell you why. Because a lot of the reported numbers, which was helping the country's numbers to recover, including in the stock market, were rebounding or going back to normal because countries were reopening and they saw stability coming back. Now that's being re-threatened again. And many businesses are not able to survive. They barely survived the first closure due to coronavirus, let alone for them to come back and get hit a second time and have to shut right back down again before they can even recover from the first go round. A lot of businesses may not ever come back. And let me be very blunt. A lot of businesses are not coming back, which means a lot of jobs are not coming back, which means a lot of people are not going to be able to get back on their feet too quickly, which means the entire country's economy is not going to be able to jump back in order like we originally was hoping. Do you see how this is working? Okay, so you got to pay attention to this stuff if you're going to be trading in the markets. So the retail sales numbers is going to be pretty important this week. Okay. All right. Now, also you have on Thursday, the European Union, the EU, they're having a leadership summit. I don't know what's going to come out of that, but just giving a heads up, that's on Thursday. And then also on Friday, you have the building permits for the U.S., which has to do with housing and different sectors like that, okay, which is I used to be in real estate. So that those numbers are going to be kind of impactful because it's also showing the strength of the economy. Retail sales numbers and building permits. When those numbers are high, that shows a strong growth in the United States. When those numbers are weak, it shows a big decline in the largest economy in the world. This is, again, why the market is sitting on standstill and not moving a whole lot. It's nervous. Because if the biggest economy in the world is on shaky ground, what does that mean for others? And especially the ones who do big business with the U.S. Because as you know, the U.S. is a huge purchaser of other goods and services from other countries. So if we can't afford to buy your goods and services in your other country, our weakness becomes your weakness and vice versa. So this is why the market hasn't been moving a whole lot. So again, my plan this week to trade is going to be setting my trend setting on 20 and trading primarily off the 15-minute time frame, getting in, getting out, and possibly off the 30. I'm really not looking to do long-term trading this particular week. Although it's nothing wrong with that because you can set it and forget it. But if you're looking to make a lot of profit this week, chances may be, and I could be wrong, but chances may be that the market may not move much. So you may not see a whole lot of movement if you're trading on the higher time frames. As long as you're okay with that, continue to trade on the higher time frames, no problem. One more thing. When it comes to all these different countries making their announcements of interest rates this week, here's just my thought on it. Again, I'm not a financial guru. I'm not a financial advisor. I'm just giving you my thoughts on what I think. Since these economies are not strong like they used to be, okay, all over the world, typically when a country is strong, then they raise interest rates. When a country is weak, they either leave interest rates alone or they lower them. Why? Because interest rates are based on how much spending you and I are doing. And if we are not spending our money, there's no way to raise interest rates. You understand what I'm saying? In a good manner, because we're not going to buy anyway. And then you're making it worse because if you raise the interest rates, we're really not going to be spending money. So typically they raise interest rates when people are feeling warm and fuzzy about their own safety, their own pocketbook. They have surplus cash to spend. And so therefore, the countries raise interest rates because they can get that extra money off of us as we're spending. But if we're not spending and there's not enough money moving along, they tend to leave the interest rates alone to encourage you to spend, or they may even reverse and lower the interest rates so that you'll feel more warm and fuzzy going out buying a car or a house. Because why? You say, oh, I can save money by buying it now. Why? Because the interest rates are lower than they used to be. Okay. When they do lower interest rates, okay, they call it hawkish and dovish. Hawkish, we'll hear this term in the stock market primarily, not so much in the Forex market, but it still has to do with interest rates. When you hear the term hawkish, that means they're going to raise interest rates or interest rates will raise. When you hear dovish, dovish means down. That means they're lowering interest rates. And when they lower the interest rates, that currency also loses value. So if a country lower its interest rates, you can expect any currency that's going against it to go up and that currency to go down. Okay, let me give you an example. So let's just say that the euro is going to lower their interest rates. That means if you're trading the euro versus the USD, the US dollar is going to go higher and the euro is going to go which way? Lower, down, dovish, down, hawkish, high, up. Okay, so always remember that. Dovish and hawkish, if you ever trade and you hear those terms in interest rates for a country, hawkish means high, dovish means down. So now you understand how to interpret interest rate news. Most of the time, the other countries around the world follow what the U.S. economy does. Okay? They follow it. So if the U.S. is lowering their interest rates, other countries around the world sometimes follow suit. But if the U.S. is leaving their interest rates alone, many other countries tend to do the exact same. So since the interest rates in the U.S. are being left alone, I do think that the interest rates for this week on all these different countries that's making their announcements, I believe that they're going to just leave theirs alone as well. Okay? So anyway, here's the big problem though, and I'll leave you with this. The big problem with these is, even though, and this happened just as I told the signals group, I told them in advance, I said, I think on the AUD versus the Australian dollar, they had interest rate news announcements coming up. But I told them I think they're going to leave the interest rates alone. They're not going to raise them or lower them. And sure enough, they left them exactly like I said at 0.025, right? So they didn't mess with the interest rates. So I'm not concerned about the interest rates being the issue. What they did was, and I told the group, I said, they're manipulating the market, institutions, bank, whatever you want to say. I said, they're manipulating the market prior to the interest rate announcement, because that's when money flows in on people who want to gamble on it. So there's a lot of money at stake, right? So it wasn't even the interest rate news itself that impacted the markets. It was leading up to it, where there was a lot of manipulation and stop hunts and so forth. And sure enough, I was right. So on these pairs that have interest rates this week, I don't believe the interest rate news itself is going to be that impactful. I think that the manipulation is going to happen prior to the news announcement, okay? Prior to it. So be careful if you're holding pairs going into any news event, especially interest rates, because it could be targeted for stop hunts before the actual announcement takes place. Okay, you guys, hopefully this information was helpful for your trading. Have a great trading week, and I'll talk to you guys in class on Tuesday.